ရင်းနှီးမြှုပ်နှံမှုနဲ့ပတ်သက်လို့စိတ်ဝင်စားတဲ့မိတ်ဆွေတွေအတွက်ကိုကျမကဒီနေ့ရင်းနှီးမြှုပ်နှံမှုအသစ်တစ်ခုအကြောင်းနဲ့မိတ်ဆက်ပေးချင်ပါတယ်။အဲ့ဒါဘာလဲဆိုတော့ mortgage note investing မှာကျမကအိမ်ချမ်းမြေမှာရင်းနှီးမြှုပ်နှံတဲ့သူဖြစ်တဲ့အတွက်ဒါကျမတို့ရဲ့ဒီ investment portfolio မှာအဓိကအဖြစ်တော့ rental properties တွေကို invest လုပ်ထားတယ်။ဒါပေမဲ့အားလုံးသိတဲ့အတိုင်းပဲရင်းနှီးမြှုပ်နှံမှုဆိုတာတနေရာထဲမှာတစ်ခုထဲမှာထားလို့မရဘူး။ကိုယ့်အတွက်ဒီ risk နည်းဖို့အတွက်ကိုကျမတို့က investment အမျိုးမျိုးကိုကိုယ့်ရဲ့ဒီ portfolio ထဲမှာထည့်ထားရတယ်။အဲ့ဒါကြောင့်ဒီနေ့ဗီဒီယိုမှာတော့ဘယ်လို investment တွေကိုကျမက invest လုပ်ထားရဲဆိုတာကိုရှင်းပြပေးမှာဖြစ်ပြီးတော့ဒီနေ့အထူးဧည့်သည်ကိုလည်းဖိတ်ခေါ်ထားပါတယ်။အဲ့ဒီတဲက investment အသစ်တစ်ခုဖြစ်တဲ့ mortgage note အကြောင်းကိုဒီနေ့ရှင်းပြပေးမှာဖြစ်ပြီးတော့ဒီနေ့ကျမဖိတ်ခေါ်ထားတဲ့ဒါကျမရဲ့အထူးဧည့်သည်တော်ကဒီ mortgage note investing ကိုရှင်းပြပေးမှာဖြစ်ပါတယ်။ကျမနာမည်ဝင်းမြတ်သူပါ။ကျမကအခုလက်ရှိ American နိုင်ငံဆီယာတိုမှာနေထိုင်ပြီးတော့အိမ်ချမ်းမြေနဲ့ mortgage loan အကျိုးဆောင်လုပ်ငန်းကိုလုပ်ကိုင်ပါတယ်။ကျမရဲ့ဒီ My American Dream Channel ကနေမှမြန်မာ community အတွက်ကိုအကျိုးရှိတဲ့ရင်းနှီးမြှုပ်နှံမှုနဲ့ပတ်သက်တဲ့ဗီဒီယိုတွေကိုမျှဝေလာခဲ့တာ၄-၅နှစ်ရှိနေပါပြီ။ဒါပေမဲ့ကျမအခုပထမဆုံးအနေနဲ့ကျမတို့ရဲ့ဒီရင်းနှီးမြှုပ်နှံမှု portfolio မှာဘာတွေကို invest လုပ်ထားရဲဆိုတာကိုရှင်းပြပေးမှာဖြစ်ပြီးတော့အဲ့ဒီထဲကဒီ investment အသစ်တစ်မျိုးဖြစ်တဲ့ mortgage note အကြောင်းကိုလည်းရှင်းပြပေးမှာဖြစ်တဲ့အတွက်တကယ်လို့ mortgage note အကြောင်းကိုစိတ်ဝင်စားတယ်ဆိုလို့ရှိရင်ဗီဒီယိုအဆုံးထိကြည့်ဖို့တိုက်တွန်းလိုက်ပါတယ်။ကျမတို့ပထမဦးဆုံးရင်းနှီးမြှုပ်နှံမှုတွေစလုပ်တဲ့အချိန်တုန်းကဒါကျမ invest ပထမဆုံးလုပ်ခဲ့တာကတော့ stock investment ပါကိုယ့်ရဲ့အလုပ်ကနေမှရတဲ့ 401k IRA အကောင့်တွေကိုအသုံးပြုပြီးတော့ကျမပထမဦးဆုံးဒီ stock market ကိုစပြီးတော့ invest လုပ်ခဲ့တယ်အဲ့နောက်ပိုင်းမှာကို့မှာငွေပုံငွေရှမ်းလေးရှိလာတော့အဲ့အနေစပြီးတော့ဒါ individual account ကို brokerage မှာဖွင့်ပြီးသွားတော့အမှကိုစိတ်ဝင်စားတဲ့ဒီ stock တွေအလားအလာရှိတဲ့ stock တွေကိုဝယ်ခဲ့တယ်အဲ့ဒီကနေမှတစ်ဆင့်နောက်ပိုင်းကျမ real estate ဘက်ကိုကူပြောင်းလာတဲ့အလုပ်ကိုင်ရလဲ realtor mortgage loan officer လုပ်တာဖြစ်တဲ့အတွက်အိမ်ချမ်းမြေကကျမတို့အရန်ကိုနီးစပ်တယ်အဲ့ဒါကြောင့်မလို့ rental properties တွေကိုကျမတို့ဝယ်ခဲ့တယ်အဲ့တော့ rental properties တွေကိုကျမတို့စပြီးဝယ်ခဲ့တာက2020ကနေစပြီးဝယ်ခဲ့တာအခုဆိုလို့ရှိရင်9နှစ်လောက်အတွင်းမှာကျမတို့မှာ rental portfolio ကတိုင်းတာတစ်ခုထိရှိနေပြီပေါ့ဒါပေမဲ့ဒီကြားထဲမှာကိုယ့်ရဲ့ rental portfolio တောင်းမှပို့ပြီးတော့များနေတယ်လို့ပြောလို့ရအောင်လို့ rental properties တွေကျမတို့ပို့ပြီး invest လုပ်ခဲ့တယ် stock market က volatile ဖြစ်တာတကြောင်နောက်ပြီးတော့ကိုယ်ရမ်းမကျွမ်းကျင်တာလည်းဖြစ်တယ် risk လည်းများတယ်ကိုကအချိန်လည်းမပေးနိုင်တဲ့ busy professional တွေဖြစ်တဲ့အတွက်ကျမအမျိုးသားက rental ဘက်မှာအားတန်ခဲ့တယ်ဒါပေမဲ့မကြသေးခင်ကလွန်ခဲ့တဲ့2နှစ်လောက်ကစပြီးတော့ကျမတို့ရဲ့ investment ကိုတဖြည်းဖြည်းနဲ့ကျမတို့ပြောင်းခဲ့တယ်အခုဆိုရင်ကျမတို့က mortgage note investment ကိုလည်းစတင်ပြီးတော့ကိုယ့်ရဲ့ဒီ investment portfolio မှာထည့်ခဲ့ပါတယ်အဲ့ဒါကြောင့်မလို့ဒီနေ့ဗီဒီယိုမှာကျမဖိတ်ခေါ်ထားတဲ့အထူးဧည့်သည်ကတော့ဘာလို့လဲဆိုတော့ကျမရဲ့ best friend လေးဖြစ်တယ်ကျမရဲ့partner လေးဖြစ်တယ် business partner လေးဖြစ်တယ်ပြီးတော့ကျမရဲ့ soulmate လေးဖြစ်တယ်အဲ့တော့Dr. Keith Grossama သူကတော့ကျမရဲ့အမျိုးသားလေးဖြစ်ပြီးတော့ကျမတို့ရဲ့ဒီinvestment portfolio ထဲမှာဆိုလို့ရှိရင်ဒီ mortgage note investment ကိုသူကဦးစီးပြီးတော့လုပ်တာဖြစ်တဲ့အတွက်ဒီ mortgage note investment အကြောင်းကိုရှင်းပြဖို့အတွက်ဒီနေ့သူ့ကိုဖိတ်ခေါ်ထားပါတယ်Keith, happy to have you here today to discuss our investment portfolio with my audience and explain how note investment fits our investment strategy.
It's great to be here. Thanks for having me.
Since mortgage note investment is not a well-known investment like many other investments, so I want to explain what mortgage note is and how we started this note investment. Since you're leading this part of our investment portfolio, can you walk us through about that?
Yeah, so I think at its basic core, you can think of notes as really just purchasing the rights to receive payments on a debt. So we all kind of interact with notes in different ways on a daily basis. You may be making car payments, you may have a credit card, you may actually be making mortgage payments to your bank once a month. And really all that a note is just that promise to pay a debt. And so in this case, when we're investing in mortgage notes, what that means is that we're actually buying the right to receive those payments and essentially becoming the bank in the process. And it's kind of a fundamental shift from other types of real estate investing, where instead of being the landlord, we're actually becoming the bank in this situation.
Okay, so we started with rental real estate, and you shifted away from that and started talking about note investment. So how did you get this idea?
Yeah, so I really came across notes a little bit by accident, but also a little bit out of necessity, right? So it was really when we saw the rapid rate increases in the last couple years that the market really started to shift, and a lot of the math really wasn't making as much sense on rental properties. Costs of running a rental were outpacing rent increases, so we were starting to see that margins were shrinking on returns. It was becoming harder to find deals that would pencil out on paper. And so in that context, I was kind of reading and looking at different forums, different podcasts, trying to understand, well, is there something else that we could be pivoting to in this environment? And I did happen to stumble across a podcast where a multifamily investor was talking about actually moving from investing in the apartments themselves to the loans or the debt on those properties. And that really piqued my interest. It just kind of led me down a pathway of trying to understand, okay, well, how can I apply that? How can I get involved in that? And so that started a pretty long process of me reading every book I could find, listening to all the podcasts I could find, and kind of finally led me to this niche of investing in mortgage notes.
Why don't you compare the rental real estate with the mortgage note? And mortgage note, I know they both have pros and cons, but since not many people know about mortgage note, can you explain what are the risks and reward comes with the mortgage note investment?
Sure. So I think that there's a lot of similarities between the two of them, right? So rental property, especially long-term rentals, you're going to likely be receiving once a month payments from your tenant, versus notes, you're going to be receiving once a month payments from a borrower in a performing note situation. Right. So that's one of the big similarities between the two of them. However, where they do start to differ is in some of the expenses that I was kind of alluding to in the previous question. So with mortgage notes, really the cash flow has very little overhead, if you will. So there is a little bit of expense in some cases. So normally you're going to board your note with a professional servicer who's going to manage collecting the payments, talking to the borrower, compliance, all of that. And often there will be a fee of about $20 to $35 per month. But usually this is the only expense that you have to worry about as a note investor versus all of those other expenses we talked about with rentals, right? So your taxes, your insurance, any air conditioning that breaks, whatever you can think of that might come up as an expense. So often you're going to have a significantly higher monthly cash flow for the same monthly payment on a note versus a rental property. So that's one of the big benefits of notes over rentals. Now, one of the drawbacks, unfortunately, is that notes don't have the same tax advantages as rental properties do. So notes are interest income. So that means that they are taxed at ordinary income rates, which is going to be your highest marginal tax bracket. So that can be a bit of a drawback, especially if you're already achieving the highest tax bracket because of your regular income. But there are ways to kind of mitigate that and work around that a little bit. One of the best ways to do that is actually to purchase notes inside of self-directed retirement accounts, which is a really good use case for those types of accounts. And I think that could be a very good complement to the real estate, where actually probably keeping that outside of tax advantage accounts is very beneficial because of the tax breaks you can get. And then notes can work fantastically inside of these tax sheltered accounts.
So you're talking about investing through your retirement account. So for the younger investor, why they don't really have large amounts saving in their retirement account, can they still do their note investment through that their 401k or their retirement account?
So that could potentially be a challenge, especially with a lower balance IRA or 401k account. But there are ways to work around that. So I'll give an example from my account. So when I first wanted to get involved in mortgage note investing, I kind of just wanted to dip my toe in the water and kind of get an experience. So I actually went and found some lower price notes that were on some vacant land, actually. And the purchase price for the first note that I bought was only $8,000. So it is possible to do this in a smaller retirement account and kind of work your way up to the bigger assets. Now, that being said, it's not easy to find notes at that lower price point. So oftentimes you're probably going to want to think about at least $50,000 is a pretty typical entry point for this asset class. And with the current way the market is, probably some of the assets that are going to be on better properties are going to be closer to 100,000. So there is a kind of cash intensive aspect to this asset class. There are ways to invest with less capital. There are some creative ways to get involved in the space that we discuss in more detail in some of my videos on my channel. But just as a general rule of thumb, it is very flexible in its entry point, but probably 50,000 would be a good starting point.
In that case, and earlier you also explained that one of the disadvantages of no investment is having to pay higher taxes, not like in the real estate.
Correct.
So to me, that's very similar to investing in, stock market, like day trading or short-term investment, or you're saving money in the high yield saving account and also CD.
Exactly, right? So all of those things that you just mentioned, so if you're doing, short-term day trades where you're going to be in that short-term capital gains category, absolutely CDs, high yield savings accounts, these are interest income producing assets as well. So they're going to be taxed the same as the mortgage notes would be. It just happens to be that, of course, mortgage notes are going to produce a higher yield than pretty much any high yield savings account because those are getting around 4% right now, and notes on the kind of lower end, a lot of times are about 8%. And you can find assets that are 12%. It's possible to get even higher if you can get pretty creative and buy these at a steep discount. So definitely they actually will beat out those types of assets, usually on a pure yield standpoint.
You're right. I also think returns from no investment is much higher than other just regular saving accounts, or just, getting annuity for those people who are close to retirement. And note is much safer investment. Why don't you share about the first deal we did together? And that time I wanted to buy a rental and you talked me out of it by comparing the returns and the yield we could get when investing the same amount of money in the note versus in the rental property.
Sure. Yeah. So the first actual note that we bought together was on a small house in Indianapolis. And the house itself is worth about $115,000 current market rent. And we were able to buy actually a partial note, which means that we didn't buy the entire mortgage. We bought actually 63 payments, so a little bit over 5 years of payments. And we're able to get $1,300 a month of cash flow from that purchase, and we invested about $58,000. So overall, our yield on that investment is just under 12%. That we're getting from that monthly cash flow. What's nice about it is that our investment is significantly lower than what the current value of the property is. So if something were to happen, if the borrower were to stop paying, there's a very good chance that through a foreclosure action or some other type of deal workout, whether that be restructuring the terms of the note, or potentially in some cases, the borrower can sign the house back in what's called a deed in lieu of foreclosure. Our investment should be pretty safe because there's a lot of cushion between what we paid, our $58,000, versus what the house is worth, which is $115,000 in the current market. So that provides a lot of safety, and at the time, it's hard to beat that cash return that we're getting. If we took that $58,000 and put that into a down payment, maybe we could get 4% per year right now, or probably less given the current environment. Especially in that case, right? We're not going to buy a house for cash with $58,000, so we're going to have to get a mortgage. And so that's going to significantly lower the returns. So that was kind of how the math made more sense at the time for the note.
Yeah. And we can buy any rental property in our market with $60,000 down payment, right? The median home price is close to $500,000. So if we put 20% down, that is $100K. And we still have closing costs and then managing the tenants, managing the rental, and there are a lot of repair costs. So I just decided to try on the mortgage note.
Yeah, and so far it's been fantastic. So we got our first payment from that this past September, and we're sitting here in May, and we've been receiving a monthly payment each month like clockwork. So far it's been a great investment. Been pretty happy with that one so far.
Yeah, thank you.
You're welcome.
So how about, do you recommend a newbie investor to invest in a mortgage note rather than a rental property?
I think it's a good option for newer investors, but of course there's a learning curve to both of these types of assets. I don't think it makes sense to just dive in and try to do this without any education, anyone mentoring you. There are a lot of different ways that you can mess up and get yourself into trouble, whether that be financially or legally. So I spent a lot of time actually diving in and learning everything I could. I spent almost a year actually learning about notes before pulling the trigger on that first investment. And there's still a lot that I'm still learning, and I'm working with a mentorship program to make sure that I actually know all the ins and outs of this investment class. So long answer to your question, but yes, I do think it can be suitable for newer investors. But to kind of help with some of that learning curve, probably working with more experienced investors, whether partnering with them or potentially even investing into a note fund. There's a lot of different note funds available, where of course you would have to still vet the note sponsor, or sorry, the fund manager, to make sure that they are reliable. But those are some strategies or ways that you can get involved maybe as a newer investor as you kind of learn, because like I said, there's a lot of pitfalls to look out for. And I think it's the same answer for rental properties, right? You can certainly learn by doing, but there is a big steep learning curve.
So once you learn about in and out of note investment, how long do you need to spend time to underwrite the deal?
Yeah, so I actually have developed a framework that has 7 specific points to work through, where you can actually do the initial analysis of a mortgage note, whether that be analyzing the laws of the state, how much the borrower owes, looking at the property on Google, right? You can do all of that initial, usually within 30 minutes, and there's different red flags you can pick up that you can screen a lot of notes out without, maybe within the first 2 or 3 minutes of looking at a deal. But realistically, start to finish, looking at each deal, I'd say you need to dedicate at least 30 minutes once you're pretty comfortable with it. That's just for the initial screen. When you're actually going to be purchasing, there's a deeper dive you'll need to do that's going to take more time for you to comb through all the fine details. But I think in general, similar to when you first run the numbers on a rental property, that's the initial underwriting. The same thing we're talking about here for notes, about 30 minutes. Yeah.
Okay. Yeah. That's why I don't see you so much obsessing with the market up and down like your other doctors' friends who invest in the stock market.
Yeah, no, I don't have to sit there and stare at charts and draw trend lines and try to interpret, technical analysis, like all those things that people talk about with stock trading and everything. So yeah, there's a huge time component to that
right.
I'm not doing, which for me is great. I found that the volatility of looking at stocks and thinking about all the intraday stuff that was happening to be a bit too much. So for me, this is a better fit.
Yeah, that's true. It's safe for me as well. With my daily responsibilities, working with clients, I don't even have, to look at the market. Sometimes when I remember to check the market is already ended. Especially we live in the West Coast and we are like 3 hours behind. So
yeah, I might remember to check it during my lunch hour, but then the market closes at 1 o'clock here. So not much opportunity to do much with that information, usually to see if it's up or down for the day. So.
Yeah. So now that we diversify our investment portfolio in different investments, what are the concerns you have when you have to think about our investment?
Right. So I think, obviously every investment's going to have its risks, going to have its drawbacks. We talked just now a little bit about stocks and some of the volatility and how that can be a stressor. Thankfully with notes, my notes aren't sitting on a public exchange where they're going to be fluctuating minute to minute, hour to hour on a chart that I can look at and stress about. But you do have to, worry a little bit about, is that monthly payment going to come in, right? Is it going to remain a performing note? Is there going to be are you going to have to foreclose and things like that? And a lot of those stressors you can alleviate to a degree by making sure you do good underwriting, good due diligence processes up front. A lot of what can help you know that a borrower will probably keep paying is actually their previous payment history. That's kind of your best predictor of the performance. But sometimes you're buying notes where maybe it's only been 2 or 3 months of seasoning and you don't actually have all that to go off of. So maybe you have to look at their credit report and things like that during your due diligence to give you some of that additional comfort. But for the most part, I think that's kind of where you help yourself sleep more comfortably at night, is with that initial analysis. So there's not too much to worry about. I don't have to worry about a borrower calling me in the middle of the night to say, hey, the toilet's broken, or there's, an ant infestation, whatever you could think of that would come up with a rental property.
Right. With our rental properties, we always have constant battle.
Constant battle. It just seems like, of course, now that we're getting into the hot season, we're probably going to have an AC unit go out. I'm sure we'll get a call anytime that, hey, the AC is broken again, or we need to replace it, or maybe we need to replace another roof this year. And so it just seems like there's always something with rentals. And for me, that gets to be a little bit tiresome. I know it doesn't bother you as much as it does to me, but I sleep a little bit better with notes than I do with some of those, worrying about these big ticket expenses that come with the rental properties.
True. So with this portfolio arrangement, how has these investment strategies get us towards our financial freedom goal? So
I think the real benefit of adding these notes, so we had the one we talked about that's producing about $1,300 a month of cash flow. We subsequently got another one a few months later that's producing an additional $1,500 a month of cash flow. So that increased our passive income each month up to just under $3,000 a month.
Just with two notes.
Just with two notes. And compare that to where our rental portfolio had us, but you can actually get quicker cash flow out of the mortgage notes than you can out of a rental portfolio, especially now with some of the drawbacks we've been talking about with the current market condition for rental properties. So it's definitely a way to get to our financial freedom number, I think, quicker, because it is a strategy that prioritizes cash flow today a little bit more than some of the maybe cash flow tomorrow. And if you're just buying the notes and holding them and collecting the payments.
Yeah, that's very true. Okay, so if one of our viewers want to learn more about mortgage note investing, what would you recommend?
Sure. So I think a great place to start would be to come check out my channel at the Alternative Investing Doctor. I'm producing a whole educational series about note investing, kind of going through the very basics, some of what we've been discussing today, and diving into more nuanced strategies. So buying partial notes, borrowing against notes. There's a lot of different flexibility and different strategies you can use. And that's one of the things that I really love about this asset class, is just all the flexibility and creativity that's available with it. You can also check out my website, alternativeinvestingdoctor.com, and there I have some free resources and educational materials for you as well. I think that'll just be a great place for you to start.
All right. So any last thought for the physicians who might be feeling stuck like you were?
Absolutely. So like I was just saying, I think that mortgage notes are a fantastic way to start to buy yourself some of that financial freedom. And I think one of the really cool ways that you can implement this is you could start to look at replacing some of your clinical income. So maybe you're a 1.0 FTE and you want to go to a 0.8. You can do the math on how much income you need to produce to replace that clinical income and set that as your target, and you can map it out. How long is it going to take you? How many notes do you need to buy? And start working towards that. And then once you can get there, that's going to give you a lot more flexibility, a lot more autonomy, which I think is something that we're really missing in the current environment of medicine right now.
Thank you so much, Kate, for today's interview.
Thank you for having me. It was a fun conversation, and I hope you guys got value out of it today.
Thank you. And see you later. Bye.
Bye.